Tesla has been making EVs for years, and the automaker's made significant improvements in its transition through the growth and maturity stages. According to ARK Invest CEO Cathie, electric vehicles are taking a share of total auto sales as ride-hailing services like Uber are now partnering up with car rental companies like Hertz to rent EVs. There's been a massive shift to electric vehicles, and this is expected to continue for a while. Most car users now prefer to buy electric cars for several reasons, one of which is that EV maintenance costs are 50 to 60% lower than those for gas-powered cars. Tesla bull and YouTuber Dave Lee recently disclosed why he remains bullish on Tesla, and it's not just because of its cars. Hey guys, welcome back to Tesla Tomorrow. Dave Lee cited that Tesla's market will focus majorly on 4 sectors: EVs, FSD, energy, and AI. Tesla has made incredible progress in all aspects, although it is more famous for its advancement in electric vehicles and full self-driving. On the other hand, Tesla is yet to fully advance its energy and AI businesses, even though experts predict that Tesla will earn massively from both ventures. Tesla's solar business is a potential driver for the company's growth. In 2021, the company reported $801 million in revenue from its energy generation and storage business, which includes 3 main products: solar, its Powerwall storage device, and its Megapack. Although Tesla has not been fully focused on its solar business, there will still be opportunities to fully optimize the business in the future. Stock investor Gary Black expects to see Tesla Energy earn about $20 billion in revenue in 2023 and about $8 billion in gross profit. According to him, this is one catalyst that is not well known, and it is because Tesla Energy has not contributed much in the past. In the same way, Tesla will also increase its revenue by a large margin when it fully gets a hold of its AI technology. How big does Dave Lee expect Tesla to be in the future? More details in this video, but before we get into it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Although Tesla is currently viewed as the biggest EV manufacturer globally, it is important to note that Tesla's EVs are still growing. The automaker is planning to update the whole interior of its cars to make them more modern and simplistic, since that is the place where owners will spend most of their time. Dave Lee believes that this is an aspect that Tesla continues to enjoy a better market advantage than its competitors. He had said that since Tesla is already familiar with the process, getting even better improvement won't be so much of a problem. For quite some time, Tesla's Shanghai plant has been producing Model Y crossovers with an upgraded suspension system. The elastic and damping components in the suspension system of the China-made Model Y have been optimized to reduce bumps at low speeds and allow for a more stable ride at high speeds. According to Tesla, all Model Ys that are now produced at this factory are equipped with the updated suspension system. Tesla has optimized the Model Y's shock absorber compression damping, allowing the vehicle to pass through low-speed impact sections with less damping force, which will result in fewer bumps in the car and allow for a more stable ride. The China-made Model Y comes with a highly flexible double wishbone front suspension and a 5-link independent rear suspension with strong stability. With the suspension upgrade, the stiffness of the top of its shock absorbers has improved by 50% compared to the previous settings, thus filtering out a greater degree of road impact on the vehicle. Likewise, the 2024 Tesla Model 3 is also supposed to come with an improved drivetrain that will kick out a few more electrical ponies than before. Tesla's Shanghai plant, its largest in the world by capacity, produces the Model 3 sedan as well as the Model Y, and so it's not clear if the China-made Model 3 is also using the updated suspension system. There's still a lot that Tesla needs to put in place for its electric vehicles in terms of ensuring better safety, battery, cost, and reliability. And according to Dave Lee, this could be why Tesla is taking its time before releasing its next-generation vehicle. The new Tesla model is said to cost less than the Model 3 and Model Y, and is expected to drive up Tesla's demand across its markets globally. According to Dave Lee, as Tesla lowers the prices of its cars, it will consequently expand its total addressable market, which means that Tesla will be able to sell more cars and make more revenue. While there are concerns about how profitable this new generation vehicle will be for Tesla, and how affordable it can actually be, it is good to remember that Musk considers Tesla's total addressable market to be as huge as the entire human race on Earth, and Tesla will likely lean towards affordability rather than profit maximization while making this car. Tesla's robotaxi is also another opportunity for the automaker to expand its market. This creates room for people who can't afford a car or a unit of transportation, so that even if they can't buy a Tesla, they can still be a part of the Tesla ecosystem. Dave Lee has always agreed that Tesla has better leverage overall. According to him, regional shipping isn't the only goal for Tesla, but to do so while leveraging its numerous market advantages. Tesla has a head start on self-driving technology, and will use that to its advantage. According to Lee, Tesla is leveraging the innovations that it has had with other technology in terms of motors, electronics, inverters, powertrains, and several others, and is putting it into its products. He stated that, going forward, Tesla is going to rely on its engineering innovation to improve and scale, which will result in incremental progress over the coming years. Morgan Stanley analyst Adam Jonas also shares the same thoughts. The stock expert said in a previous note that Tesla is poised to lead in the electric car race in 2023. Even as it stares down worrying demand slumps. According to him, 2023 is shaping up to be a reset year for the electric vehicle market, where the last 2 years of demand exceeding supply will be substantially inverted to supply exceeding demand. Jones stated that the coming months will be especially challenging for the electric vehicle space, echoing much of what the industry has seen throughout 2022. He added that battery supply chain crises have dominated boardroom strategy sessions, and between a worsening macro backdrop, record high unaffordability, and increasing competition, there are hurdles to overcome. Adam Jones, however, admitted that he believes in the face of all these pressures, Tesla will widen its lead in the electric vehicle race as it leverages its cost and scale advantages to further itself from the competition. But while Jonas remains bullish on Tesla, there are others who aren't that confident in Tesla's future. Wedbush Securities analyst Dan Ives said in a recent note that, after a good demand environment since 2018, Tesla is facing some serious macro and company-specific electric vehicle competitive headwinds into 2023, which are starting to emerge both in the US and China. He stated that while Tesla is cutting prices and inventory is starting to build globally in face of a likely global recession, Tesla is also not receiving enough attention from its CEO. Dave Lee believes that Tesla will take advantage of exponential technologies. Tesla plans to provide a new, fast-charging system and a battery with greater range than competitors. Its DC fast-charging system delivers up to 1 megawatts and employs a water-based coolant to ensure it's safe in delivering that power. This charging system will be used to power up Tesla's Cybertruck, the consumer pickup truck that the automaker is planning. Speaking on Tesla's Semi, Dave Lee said that for shipping companies, the only thing better than cutting costs on fuel is cutting costs on paying a real person a real wage to drive something to a different location. But with the Tesla Semi, both can be conveniently achieved. Tesla is also the only company in the world fully working on an AI-based general driving solution that actually works. The automaker's FSD software is gradually reaching its peak stage, and it is expected that in a few years, Tesla cars are going to be fully autonomous. One of the major goals for Tesla is making its cars fully autonomous, and the automaker is leveraging big data and AI to make this happen. As a Tesla fan, why are you still bullish on Tesla? Let us know down below, and don't forget to tell us what your valuation on Tesla is.